Hi, day traders out there. This is Simon with Trade and Perform Coaching. And oops, wrong screen. I wanted to do a video on. I wanted to do a video on why going long is better for all but the most experienced and expert day traders. So if you want to get a hold of me or you want to visit the room, this is how you do that. TRADEnPerform@gmail.com is the email. And so I've been thinking tonight, how do I express this, right? Besides just telling someone. So in the room, we have these algos, and the algos tell us what to do. And our basic trade kind of looks like this. Here, I'll show you. So we do use higher time frame trading, but basically, even without the higher time frames, we could trade just fine without seeing those levels. And I'm going to show you what I mean. So what we typically look for, and I'm going to use ES as the example here, and I'll give you an example of a trade this afternoon, if I can get my chart straightened up. But basically what we're looking for here, I can give you a couple of just quick examples of with very high win rates, right? So people who aren't familiar with day trading or they don't have a lot of experience, they look at these charts and like, what have you done? And you've got stars and triangles. It looks like I took a box of Lucky Charms and sprinkled it all over my chart, right? Which is fine. I have no problem. It's a lot of stuff, right? But basically what we're looking for are these algos where there's a blue diamond on the bottom facing to the downside. Again, we're focused on the long. So we're very focused on these. And what we want to see is that bar get broken. And for us, it adds, there's three major advantages. The stop is almost always the same. On this trade, it's almost always 5 points, right? We have a range bar predictor that tells us exactly where this bar will close so that we know that it's trapping on the prior bar over here to the left. And we always have preset targets, usually 3 and 5 points for scale. And then we kind of have a methodology for knowing when we're pushing for swing trades versus when we're just pushing for scalps. But that's kind of our process in a shell, right? Like that's what we do, or one of the very basic things. And when someone comes in the room, it's the first thing I teach them to do, because these traps, when they set up with the algos underneath them, just produce fantastic long side trades. I don't even worry about the short side trade, right? I'm worried about the long side trade. So sometimes it can be frustrating, like you'll have an area here, but even here you'll see this tested one tick underneath, still sets up a beautiful long, and you can see this trade here at the end of the day. I want to go all the way over here, right? See how they came all the way down, and you had these apex trades over here with the algos on them, closes back in. That's the long at 1409. And again, that's about a 50, without doing the math, that looks like it's about a 15-point rip back to the top of the range. So that's the why the algo sets up, and it offers us very specific pieces of information, a very defined entry exit target kind of task list. And when someone comes in, it's relatively easy for me to teach someone, hey, here's how you do it. And I don't want to worry about the shorts. And now I'm going to explain to you why I don't want to worry about the shorts, right? And I'm not going to use my algo to explain it. I'm going to use a 5-minute chart to explain it, and then I'm going to use a 15-minute chart. And this is what my experience has been over 25 years of day trading. So, number one, when markets go down, they tend to go down very, very quick, and they become highly addictive, right? When you can catch moves like this to the downside, they are fantastic. So these moves can happen very quickly, and they generally can come down much faster than they go up. So that's one of the reasons people like to look for the shorts. The difficulty with the short, right? The difficulty with the short, and I'm going to use today as an example. The turn on them is very, very quick. Let me explain it this way. Let's say the market's heading up this way, right? And so first you go and you look, oh, there's gap fill, right? That's going to be the short. And you get the bar down, you think, oh, that's a great short. And within a matter of seconds, they just ramrod that thing right up on you and you're stopped, right? And then you think, oh, well, now they're going to bring it back. That's 3 bars down. They immediately ramrod it back up on you. And so visually, when you look at it, right? When you're looking at it from a outsider's point of view, you obviously go, hey, I would short here and just hold it, and then I would capture the ride all the way down and I would make lots of money. But the reality is that, at least in my experience, and I love, so you're talking to a reformed shorting lover of shorts, right? So just so you have perspective on where this is coming from, I love shorts. I think shorts are the best thing ever created, and I've worked very, very hard to stop taking shorts, mostly because of the stress it induces in my day trading versus the longs. So again, I'm going to go make the case for the shorts and against the case for the shorts, right? So as you look to the left, right, what you will see is that when markets roll down, they roll down sometimes very, very quickly, but more often than not, they also tend to do this, hey, we're going to grind all the way up against you thing, and they can do this very slow grind down. So the problem isn't when you look on this side and you go, hey, it's obvious that it's rolling down and this is a great short. The problem comes over here, and I'm going to give you an example, right? You say, oh, that's a gap down. It's a bearish move in the morning, right? So I'm going to draw this out so y'all can see it nice and big. And you go, oh, that's a bearish gap down, and the market's going to 0, right? So you take this bar and you come up here and you go, okay, well, here's the high, here's the low, and I'm going to short at the 50-60, right? And sure enough, you get into the 50-60 and it gives you this little small rotation, but then you're like, well, there's no way they're going to come all the way in and fill this gap. And at each little level, you start trying to find ways like, oh, there's the sellers have shown up. Excuse me. Here the sellers have shown up. Nope, you're going to get stopped out again. Well, the sellers have shown up again. Nope, you're going to get stopped again. Sellers have shown up here. And all this time, right, when you're thinking strategically like, hey, how am I going to grab this, right? How am I going to grab this trade to make this trade work for me to the short side? All our brains register is this piece over here, and we tend to forget until we actually try to go put it in practice. We actually tend to forget this side right over here, right, where it just keeps running. Now, the next thing I want to show you is as you look back on the days, right, notice how many days we just keep grinding up. And it literally, in order to catch this move down, right, requires perfection on entry. It's great once you have it, but it requires perfection on entry. Now, let's go through a couple of days, and then I'm going to go back to May where we really roll down, right, to still make my case. So as you look here, because this is all recent, right, so you can see even here, okay, well, if I cut the trend day down here, that's great. But what do most traders look for when they're trading, right? They look for continuity in the market, right? So if you caught this short over here, what are you going to come in the next day and do? So in order to capture this short, it required patience to stay in it, right? So that was a great move down on the 30th, right? But as you stay in that trade and you look, if you came in on the 3rd, the 4th, right? Look at all those days that were to the right, where if you kept trying to short, it was a case of being run over and being run over until when? Until you finally got a break on the 6th, assuming you were able to hold for these counter rotations, and you finally kind of sort of got a down move, right? Now I'm going to contrast that, okay? I'm going to contrast that move. And this may sound crazy to y'all, but I do this day in, day out. I've been coaching people, well, for a very long time, but since I shut down my fund, I've been coaching retail traders since 2014, right? And so now let's take the same period of time, right? So if we look to the left, you can see in this picture, see how the market actually went down pretty significantly, actually. This is a drop from around 3,900 to 3,600 in just a couple of days. It was basically a 2-week period where it was a significant bounce, right? So it's a good place to go look to kind of for the test, right? So let's go look at that test and see what happens, right? So if we erase the lines, all right, and we go and look, the first thing I want to see when I look in that period of time, how many days? So that was a good roll, right? That's the first thing I want everyone to agree on. That's a good roll. That 3,900 on down. These are 5-minute bars, only US session, right? So from in that roll from 3,900, which I'm going to measure from right over here, right? That was the high. So let's go see first how many days closed on the low, right? So this one did clearly. That's one. This one then closed on the low. Really fat bounce right there into the close, right? Closed at the mid. This day kind of closed at the low, right? Not at the low, but close. That's 2 days. This day clearly didn't close on the low. Had a pretty good bounce there into the close. Close, but no cigar, right? So I'm talking about closes on the low. This day didn't close on the low, right? Big fat bounce there into the close. 30th definitely closed on the low. And then if you look on the moves there to the right, you can see the closes on the low were done. So in this period, if you caught it perfectly on this move from 39.17 to to down to 3,600, you had 1 day, 2 days that closed, 3 days that closed on the absolute low or close to the absolute low, right? That's not a big wedge of opportunity, right? That's really pretty bad. Now, I want to show you the next piece, all right? Within that process, take a guy like me. So I'm going to look for a trade, and I'm not going to use my algo for the setup. I'm just going to use 5-minute bar setups, right? Or how I would have traded way back in the day. I haven't used 5-minute bars to trade on, and man, it's been a long time, right? Because the stops can't be controlled as well, and it's just bars by time are really, really sloppy things to do well, right? So when you look over here, right, I'm going to come over here and I'm going to go through that period of time. So the first big down day, right, which we were started off at 3,900. Bear with me because this is important. And then I'm going to go do it even where it's worse, right? So you're going to see when I come in on the day that coming into from that 39.20, right? So that really looks like it was some kind of Fed day because you can see this is really pretty quiet, and then we roll down and we popped up, and then they just tanked it into the close. Okay, so let's not worry about this. I can already tell this is a 1 p.m. and I don't trade Fed. Very, very rarely will I trade Fed. This Wednesday, I won't be trading the Fed. I don't like the unnecessary volatility exactly for this reason. So, therefore, let's not worry about it. But that first day was the down day. And if you're trading the Fed, you're a much better trader than I am anyway. So, I'll leave it at that. So, then you come in the next day, right? And you obviously get the little gap down there and the open drive lower. And here's the first hour's low. So there's a couple things I would be looking for after the first hour's low if I was wanting to go long, right? And this is assuming I can't read the chart or the price action, that I'm kind of blind to anything except what is obvious, right? Like within the algo. So I'm going to pretend like I can't tell that it's trend day down, and I'm still going to try to go long. So the first thing you'll see is what I'm going to try to do is I'm going to look. So I'm going to use the algo obviously to tip me in real world, right? But I'm going to mark off that first hour low, and then I'm going to go, hey, I'm going to look for my long. I'm going to look for my long when I break that first hour low, and I'm going to look to retrace back to the 50 retrace. So here's my break of the first hour low. So again, I have the help of the algo in real time, but in principle, I'm looking for the long. So I want to show you something. I'm probably getting a long right here because we trap back in is my guess on what the algo would do. And then how am I going to pick a target, right? So number one, in order to have captured this short without shorting into the hole and getting ripped to the upside here, I had to short the open. I don't trade the first 30 minutes because the market tends to be too fast for me. I don't like having to make mega millisecond decisions because it makes me impatient and nervous within that first 30-minute period, right? So this is basically a coaching session to explain the philosophy behind the long idea. So I know that there's stops here. So why do I know that there's stops here? I know that there are stops here because the market started to go up, and if I went long, what does everyone do? They put their stops right behind there. So I know when I break those stops, right? I want to put my long orders where other people put their stop orders, right? I want the stop orders taken, then I want to go back up. So how am I going to figure out, if I get long here, how am I going to figure out my target? I'm going to take a 50-60 retrace from the day's high, which was the opening print, to the day's low, and that's going to be my target back up. I'm going to show you in a little bit why you can't use that for just a picture perfect short. It only works on trend days down. I don't like the trade because I can't get a high enough win rate. In the room, we maintain somewhere between a 63 and a 73% win rate. I don't like lower win rates, and I don't like guesses, right? So in this trade, let's assume I took this trap right here. It's kind of hard to tell because I'd rely on the algo to kind of spit me in, but it's usually going to spit me in somewhere down here with the stop right at the low. And so let's just say we use the 5-minute bar anyways, right? So I'm going to want to see it come down here and then close back in. And when it closes back in, I'm going to use this backside test. Reality, I was long down here, but I'll use the backside test. So let's say I'm long here. Even within this process, if I go long here at 71 on the backside test, I'm still going to get a stretch from 71 to 89 to the long side. Now, I want to remind you, this is in a trend day down environment where the market closes near the low today, and I've just ripped a trade. Reality is, in the room, we'd probably be long right down here at 66, but for the sake of this conversation, we're going to say 71, and I ripped it right. I probably sold it at the 50 retrace. I probably didn't sell it at 89. I probably sold it at 86. So I still stole 15 points, right? Or $750 a contract on ES. That's a great trade. I can actually pack up the truck and go home. I've made my money. I'm good, right? I don't need to discuss my decision making with anyone else. At that point, I'm pretty happy, right? But then what you're going to see, right, is I look over here to the left. Now I'm going to erase my lines because remember, I'm still willing to go long, and I'm still probably thinking we can get this gap fill back up over here is probably what I'm looking for, which would be a normal thing to kind of say, hey, that's where we're going to fill back up to. And so remember, I went long over here. And so my first choice would be to get long when this breaks. I know all the stops are sitting over here at 37.63, or I need the market to come down and kind of set a new swing and then break that swing so I can take the stop. So what does everyone do when they swing trade, right? You come up, you get long, and then you look for the next swing, and the next swing comes over here, right? So everyone goes, I'm going to move my stop from here to here, right? So this is just the logic underneath the process is all I'm trying to explain to everyone, right? So then everyone's going to place their stop here. So what is Mr. Simon going to do? Right. So again, I might have ended up getting long here because of the algo, but that's a different story. From the philosophy of using the 5-minute bars, I'm going to go, hey, you know what? If I can take the stops over here and close back in, I'm going to use a backside test with a stop at the bottom of this swing, and I'm going to try to do what? Push back up. And I don't even need to push all the way back up here, right? 5 and 10 points keeps me in business. Even 3 and 6 points keeps me in business all day long. That's $150 and $300 a contract, and I'm totally happy with that, and I can do it at a high win rate, right? So we come in, we close underneath, we trap back in. I'm going to put my limit at 37.70, and that 37.70 gives me a potential 30-point trade to the upside. I want you to remember this is in a big down market. I am getting paid, and I'm not having to find the longs, right? I'm not over here trying to force the market to the downside. I'm not sitting on my low thinking, like, imagine, oh, I think it's going to, let's say I know it's going to 3,600, right? I'm going to sit in my short, up, stopped. I'm going to sit in my short over here, up, stopped. I'm going to sit in my short over here because I think, again, the market's going to tank, right? Stopped again, but not on my longs. Notice that my longs grind up. My longs grind up. It may sound silly the way I'm saying it, but I'm trying to emphasize longs grind up. And if you can find a way to take those longs on process, I'm going to say it again. If you can find a way to take those longs on process with a set entry, exit, stop, you are in big business. Okay. So then the market finally closes down. Imagine you stayed short all day. You have to stay short right to the close to survive this thing. Okay. So then I'm going to come back in the next day. And because I'm Simon and I like to trade long, I'm going to do the same thing all over again. So the first thing I'm going to do is I'm going to mark off, right? I don't trade till 9 o'clock. There's my 9 o'clock low. And then I'm going to start looking for stops, right? So here's where I'm looking for my first stops, right? See how it took out the stops, right? Took out the stops and then closed back in, right? You could argue the same thing here, and I might have had to do it twice hypothetically, right? Again, I rely on the algo because it gives me much smaller stops on my entries, right? So, but that's fine. Let's pretend I got stopped here. So we go, Simon, you entered at 37.03, let's say, and you got stopped on that trade. If I usually use a 5-point stop, so I probably actually didn't, but whatever, I got stopped there. Let's just say I'm down 5 points. Okay. So I'm going to see it closes back in second trap, second time. I'm going to put my order at 37.04. I get long here. So that's going to be my second trade of the day. Let's pretend like I'm down 5 points because I just don't care. And the best I'm going to be able to do is from 37.04 to 37.16. So I lost 5 points, and I hypothetically, right, made 12 points. I think I'm still in business and I'm profitable. And how would I figure out to get to 37.16? Well, here's the swings right up here. So guess where everyone's short stops are? They're right up here, and they're going to come up and take everyone's stop, and everyone's going to go, see, I knew the move was going to go down, but the market's rigged, and they came and took my stops. Well, of course they did, because you don't know where to put your trades, and that's why you're losing money, and that's why the money goes from the 97% to the 3%. Okay, so then we come down. Well, Simon, why aren't you getting stopped in this? Well, remember what I want in all situations. I want some type of swing. I want the swing to hold, then I want it to come back to take the stop, right? So sometimes, right, see how sometimes it V-shapes like this? If the market V-shapes, so we have ways of capturing those V-shapes, but it took me a long time to develop those. And if the market just came down like this, and this wasn't a key support area, and the algo didn't trigger here, well, guess what? I miss it, but that's all right, right? I want to say that again. I can miss a trade, and I can be okay, right? So the next place I'm going to look, right, what am I going to do? I'm going to go, oh, that was the swing. So I'm going to put my trade back here. And I'm going to also put a trade over here because they try to establish a swing. So this obviously didn't trap. I'm going to move on to my 36.76, right? Remember, what do I need? I need it to take out the swing and then recapture the swing. We'll see right here. That's what we did. Took out the swing. Didn't trap back in. Now we're trapped back in right here. See that? So guess what I'm probably going to do? Hopefully I got set up from down here. But if I didn't, I don't care. I'm going to come over here, and that's 37.76. So I'm probably putting my order at 37.77, right? And our point off, I get filled. And now look what happens, lo and behold, right? Same pattern. You can actually here, I'll gift this. You can do it on the 5-minute if you want. I just like more precision in my trading, so I'm not going to do it with a 5-minute. You can sue me later. I'm just not going to do it with a 5-minute, right? So I enter down here at 36.77, and the best I could do, right? I'm probably going to come either over here, and it's the end of the last hour, right? So I'm going to do this, and then my last trade would be all the way up here. So if I get in at 77, my first target up is going to be around 36.94. I'm probably taking scales along the way, but that's 77 to 94. It's roughly 18 points. And then obviously it goes on to be 20 and 22 points. It's a great trade, right? What? I didn't have to be short all day. I didn't have to fire and refire and manage my thing all day long. And the trade moves all the way to the upside. Let's go to the next day, right? Let's go to the next day. Here we are the next day. And you're like, well, look, Simon, you missed the trend day down. You missed the trend day down. So let's go mark everything off again, right? So I didn't get the move off the open because I don't trade off the open, right? That all just went. And the first place I'm looking is, can we break this swing? And we break this swing, right? We break this swing. We close underneath. We close. I would say this is a close back in. Again, you can't hide where it doesn't work, right? So I had the algo to help me out. But let's just say that's 88. I'm going to put the order at 89. I'm going to get filled. I'm going to try to at least get it back up here. I don't get it. I probably just get a 2 or 3 point scale, and I get stopped on balance. Guess what? That's okay, right? That's okay. I'm willing to take my stop. So I'm going to start again, right? Break the swings, got to recapture it. I don't like it when it just recaptures it just like this. So I'm going to probably be patient. And I'm pretty good at reading the market in real time anyways. There's really no one that's going, well, you know, when we're in the room, if you visit us, we have a pretty good read on where the opportunities are. Like, I'm going to come back and look at this afternoon swing right over here and go, hey, break that, right? So that's another place I'll look for an opportunity, plus this right here, right? I'd say, ooh, either this or this. So you see as we're coming down, it breaks underneath, doesn't recapture. See that? But it broke this, right? See how we took out all the stops right here? Closed back in. So guess what I'm going to do? Same process. I'm going to come over here, put my order 61, 62, something like that, get filled. Now what am I going to try to take out? Try to take out this guy right here. Here, let's erase this so this looks clear to everyone, right? I'm looking over here. Take out the stop, close back in, limit 1 point over here. So 61, 62, get filled. Now I want to try to get over here. Remember, I took a stop earlier, probably down 5 points on the day, right? So, well, there we go. 62 to 86, right? That's 24 points. Plus 5 still puts me ahead 19. And again, I trade with a lot of leverage. I've probably scaled as we're going along, unless I'm just absolutely sure we're going to turn. This is a bear market, right? So I'm going to be choosy as to where I turn to put my neck on the line, right? It's going to have to be a specific setup. And again, the algo helps us far beyond this, right? So then it's the last hour, and hopefully I've taken my money out. If not, it came back somewhat, and that's that. Let's go to the next day. Remember, this is the market that's going all the way down, right? Everyone's going to be super duper bearish in this market, right? So again, I'm just going to go through the process because why? The process is easy peasy and I know how to handle it. So here's the first swing down, break the swing, never closes back in. Here's the next swing down, right? We bounce, come back, take out the swing, close back in, take out the swing, close back in. So I'm either going to put my order here and get stopped one time, but then I'll just come right back over here at 39. I'm going to place the order at 40 or 41. I get long. What am I going to try to take out? This right here. So that's 40 to 57, 17 points. I get paid. I'm doing the same process over and over and over. And now I want to show you what happens. So now hopefully I've convinced you and I've shown you, you've gone, okay, this guy's a joker. He doesn't know what he's doing. And I'm fine with that, right? But now I want to come over here. See this right here? Because you guys have been all smart and yeah, that guy Simon, he's crazy. He doesn't know what he's doing. Talks about going long in bear markets. And I'm going to short. I'm going to keep shorting. I'm going to short all day. I'm going to show him, right? And guess what? You get to 928. And 928, you're going to keep trying to short. And guess what's going to happen to you on 928? You're going to get face ripped all day long. And if my experience in coaching teaches me anything, and it may not, it may all be bullshit, right? Excuse the language. But if my experience tells me anything, you shorted over and over. Oops, didn't mean to do that. Let's erase those profiles. There we go. You shorted over and over and over again as this market was going up. And a percentage of y'all lost all the money you made shorting over the last prior couple of days, if not more, right? I'm going to say that again. A percentage of y'all lost all the money you made over the last couple of days, if not more, okay? And so that's important. That is important. And the reason why that is important is because this is devastating psychologically, right? And then to make matters worse, it rolled down all night long to the next day, and you said, oh, I got it, I got it, I got it. This is going to be the big day where it's trend down. And guess what? What you're likely to be doing, because you're afraid it's going to roll and you got smoked the other day, you're going to short here, and they're going to smoke you here, and they're going to smoke you here. Why do I know this? Not because I wish anything negative on anyone, right? But I used to be that guy, right? And so I know how this works, and I've coached a lot of people in the last 4, 6, 8 years, right? Retail traders, and I know how that works. You get bearish in the hole, you start shorting the hole, and you get run over. But let me show you something on my end of the deal, right? On this same day, first of all, I have a way to getting long, but under the method I described, I'm just going to end up sitting there and diddling my fingers because I'm never going to get on the method I'm describing to you here. I'm never going to get a clean opportunity on this to take the long, right? I have a way of doing it, but there's very strong realistic probability that I just got nothing here on this day, and the day went straight up. But I didn't lose any money. Unlikely that I lost any money, right? Now, on this day, right, I have two places I can look for trades. The first place is a prior day's low. Okay, so I want to show you. Got the stops on prior day's low. So this is the day where you're getting buried on shorts, even though the market went down. Why? Because of these massive counter rotations. And you don't know if it's going to do another one of those, hey, gap fill things, right? So we know the routine now. 36, 35, 75. Recaptured, closed back in. I'm going to put my order 1 point in front roughly. Let's call it 37. It gets filled. Put a stop down here at 32, about a 5-point stop usually. And then I'm going to try to take out these swings right over here, right? So that means I'm going to run at 36 to 66. That's 30 points, and I can go home because my day is over. I've gotten what I came for, which was my money, right? I don't even need this over here. I probably figured out a way to get it off this higher low. I don't even need this run up right over here, right? And then right over here on this next day, remember, you were thinking, oh, this is the end of the world, right? So you came in, you said, oh, there's no way they're going to run it up today. And they're going to take this thing and they're going to close it on the low. And sure enough, you got kiboshed for the first hour and a half. They ran it straight up. I hope that's not you, right? If this doesn't apply to you, hey, all cool and I'm happy for you. But this applies to the majority of people I know who are trying to short. And again, even if they caught this, odds are they're going to come back on the third. And guess what the market's going to do to them again? And on the fourth, right? And they're just going to be on that pain train once it turns, right? And they're going to get back all the money they made. Now I'm going to go back, last piece, and then I'm going to go to bed because I'm tired, right? And I'll continue on this series later. If I hope I haven't lost everyone, but I'm going to go back to January. Why am I going back to January? Because January had some ugly days in it. Here we go. Look at that. 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 Everyone's like, oh, it's so bearish. The market must be going to zero and it's never coming back, right? But if you look, let's just look at this little time span here, right? If you look, if you were short here, right, retraced all the way back up, right? On the 13th, you actually got a trend day down that closed near the low, right? All the way down here. That one paid you. On the 14th, break the swing, get the payday. And it was a big payday too. All the way back up, all the way back up, right? Over here, each time I book the swing, look at my counter rotations once I recapture are just enormous, right? Whereas my short, can you imagine the poor guy that was short over here is like, oh, it's going to zero, it's going to zero. came all the way back against them. I almost know no retailer traders that can survive that counter rotation back up. It just doesn't happen. That's all there is to it. It just doesn't happen, right? And then again, if you look all the way through this process, break the swing, rotation back up, right? Over and over. And then you're going to look at the 20th and you're going to go, that's it. I got them. The market's going to crash and it's all over. And you look at those 3 days. So remember on those 3 days, right? They got to get me down here. Notice they don't close back in, and it's got to be in the last hour. So I'm all right. I may not have found a way to get long, but I didn't get run over, right? I didn't get run over. And then over here again, when you look on this day, my short friends got run over, right? I need to trap back in. I trap back in, and then hopefully my algo gave me a way to get long on that day. Maybe it did, maybe it didn't. There's a head and shoulders right there. You can clearly see they took off on. So hopefully I captured this right over here to the long side. And then the last thing I want to point out, and this is really important, right, before I leave y'all tonight, and hopefully I've convinced some people to try to focus on the long side of the trade, because you see over here, look how fast you get ripped when the market turns on you. It can really be difficult, right? It's a few days of glory, and then it's weeks and weeks and months of disaster. And I want to show you just this. Look when we go on these big, long, extended runs. See this right here? No short, in my experience, retail side, who's not very adept at flipping from long to short. It sounds so easy, but it's not. Survives this. This 28th through February 2nd wipes out any money you made over here, is my guess. Not for everyone. If you disagree with me, I'm cool with it. But for so many people, it is a wipeout. That's just the facts, right? It's a wipeout for most people. Okay, so I don't want that for you, and I'm trying to find a way to help you with that. Yeah, people may not like that, but that is what I'm trying to do, right? And it'll keep you from this here. I don't make any more money than you do when it goes like this. I don't have a total solution for open drive higher, grind up all day long, but I'm not shorting this, and I'm not getting stop after stop after stop, right? And I've learned how to avoid that potential outcome by encouraging my coaching clients not to short. That is the best way I can put that. By encouraging my coaching clients not to short, I have helped them by keeping them on the right side of the trade consistently. And it has made all the difference in the world. And so hopefully that will help y'all. That would be my help. So if you'd like to meet in the room, or you have some questions, or you need some one-on-one coaching, or you'd like to know how the algo works, reach out to me, right? TRADEnPerform at gmail.com. This is the email address. There's no pressure. It's a great team. We're all in the same process, and we're all doing the same thing. And that's really, really cool. So TRADEnPerform, gmail.com. And that's all I got. I will talk to y'all later. Have a great night, guys. Let's go kick some ass tomorrow. See ya.